Hi, good afternoon. Welcome to the marketplace. Coming up this afternoon, Ghana passes fifth IMF program review and is set to receive $358 million after board approval. Also ahead, CD records significant gains against the US dollar and other major currencies on the interbank market, with rates dropping to around 12 cedis 20 pesos. We hear from Chief Executive of the Ghana Association of Banks, Shonewa.
Cause for speculation is volatility. So anything that you can do to take out volatility will then immediately impact speculation. And one way of dealing with the volatility is to improve supply.
My name is Darryl Kwao. Thanks for joining us. Details coming up. And thanks for staying with us, everyone. The International Monetary Fund and government have reached a staff-level agreement on the fifth review of Ghana's three-year program under the Extended Credit Facility. The deal clears the way for Ghana to access about $385 million once it receives management and executive board approval. This will bring the total amount disbursed to Ghana since May 2023 to about $2.8 billion. Here's more in this report.
Now, based on analysis of Ghana's program and the key criteria that was on the table for the fifth review, a staff-level agreement has been reached with the IMF. We can also talk about progress made in the area of inflation, ongoing structural reforms, economic growth, and arrears clearance issues, and the fact that the Bank of Ghana is not lending to the government of Ghana. Now, during the review this week, the IMF also highlighted Ghana's commitment to fiscal discipline, financial stability on the part of the Bank of Ghana. In layman's terms, we can say that Ghana has passed the fifth review. However, this is at the staff level. So if the report is accepted by the executive board of the IMF next week, that should lead to the release of more than $300 million to Ghana. That should hit Bank of Ghana's account before the middle of this month.
Well, joining me on Zoom to discuss this is Senior Finance Lecturer at the University of Cape Coast Business School, Dr. Seram Kawa. Good afternoon to you. So how significant is it that we've passed the fifth program review in the broader context of Ghana's economic recovery plan?
Thank you very much, Larry. This is a good one for the country, just as we have been having over the past years, that the staff level agreement has been reached. It shows a level of commitment to the progress Ghana has made over time. And so it's a welcoming news, and we hope that that will go a long way to strengthen the already improving economic situations that we have in the country.
Yeah, let's dig deeper. We are expecting some $385 million after board approval. How is this going to impact Ghana's macroeconomic indicators, inflation, debt servicing, currency stability?
Yeah, so when you look at the macroeconomic indicators, we already have inflation in single digits. So if inflation is in single digits and we have money that is coming in, that will go a long way to strengthen our foreign exchange rates. And if the foreign exchange rate is improved, what it means is that we are not going to have the issue of imported inflation, and that will go a long way to affect the rate of inflation that we have in the country. Secondly, we'll be able to pay our debts, and then the debts that we have not been servicing for some time now will also be paid over time. That way, we are going to have a strong buffer in terms of our foreign exchange that we are having. And so the depreciation of the cedi that we have seen picking up for some time now, within 2025, we have about 40% appreciation of the cedi, and that can also enhance it within the period that we are talking about.
So we've already received $2.8 billion from this program. Are we seeing tangible improvements in economic management?
Yeah, so we have seen some improvements in the economic management based on the money that we have received over time, in the sense that there has been some form of fiscal discipline. We have seen IMF making sure that the right things are done, in making sure that you don't overspend in the economy. We have seen the reduction of inflation rates. We have seen the debt restructuring has happened, and it has improved the debt to GDP ratio significantly. And then the debt servicing is also going on. That way, we are getting investor confidence in the economy, and that is good news for us. And that reflects in the international bilateral agreements that we are getting between Ghana and other countries.
Yeah, and hopefully after the board approval, we are going to receive another $385 million. Remind our audience once again, what risks or conditions are attached to such agreements? How might they affect long-term economic growth?
Yeah, so yes, there are conditions that are attached to the over $300 million that we are dollars that we are expecting to receive. One, the energy sector issues have to be improved, in the sense that you must make sure that you raise enough domestic revenue to improve the energy sector. And that is why every quarter we see the energy sector in terms of electricity, water, and our utilities going up. We also have a condition that there is the need for us to improve the tax administration in the country. So if we are going to improve the tax administration in the country, then it is significant for us to have reforms in that particular sector. We are still waiting for government to come finalize the reforms with the IMF in terms of VAT and all other taxes that we have. The other condition is that mobilize strong revenue within the country and use the money prudently. Once these things are met, then we will be able to weather the storm as a country in terms of economic management of the country.
How critical is this IMF support for investor confidence and maybe access to international markets? There's been debate whether or not we are ready to access the international market.
Yeah, so with the IMF support, at a point in time, we've lost investor confidence in the country. We are cut out from the international financial market. It became very difficult for us to service our debts. And so IMF coming in and giving us support has brought some level of investor confidence in the economy, making sure that we return the country into a better macroeconomic situation. We also have the situation where we are saying that it's looking good. Our credit rating have improved over time. It may pave the way for us to get into the international financial market. Though we may have the ability to get into the international financial market and raise some amount of money, it may be very early now for government to make that decision. They can still wait and make sure that they put the macroeconomic indicators still improve better, inflation coming down, exchange rate should be stable for a period of 6 months and over. Then we can say that, yes, we can now go back to the international financial market. We have a lot of job to do as a country, and going back to the market to borrow might be a rash decision government will take, and it may come back to haunt us dearly.
We are headed for our last review after this, May 2026. We are hopefully going to end the program. Where do you stand when it comes to calls for an extension or not?
I don't think there is the need for us to call for an extension. You know, we went and then we came back. There was a time we said there is no need for us to go to the IMF. The lessons that we have learned should be able to help us go ahead and improve our economic situation. When we are able to put our country first, when we are able to put our country before political interests, our own selfish interests, we will be able to improve our situation. If we go back to IMF and we extend this particular agreement, then we are telling the whole world that we are not capable of managing our own affairs. Let us leave out politics and use technocrats and people who are able to manage the economy, do that, and we'll be able to get the returns that we want to get.
Very well, Dr. Seram Kaur. Apparently, I'm supposed to be congratulating the University of Cape Coast for being the best. According to my director, I don't know where he's getting that information from. Yeah. Times University ranking, I don't know what that is, because the University of Ghana is the best university as far as education in Ghana is concerned, isn't it? Just pulling your legs.
We have the Times ranking, and University of Cape Coast is #1 in Ghana, #1 in West Africa, 11 in Africa. So that position that has been enhanced for the past 3 years consecutively, UCC has been at the top. That only shows the commitment lecturers, students, have towards activities of the university. And congratulations to everybody, especially the university management, in bringing us this far. We thank the media also for helping us get the University of Cape Coast to the limelight. And we are still the best in Ghana.
It's debatable, but we still congratulate you anyway. Thank you so much, Dr. Seram Kaur. Happy Friday to you, Senior Finance Lecturer at the University of Cape Coast Business School. So, moving on, the Ghana cedi has recorded significant gains against the US dollar and other major currencies on the interbank market over the past 2 days, with the rates dropping to around 12 cedis 20 pesos. The appreciation follows recent adjustments to the Bank of Ghana's dollar auction program and other market interventions. Chief Executive of the Ghana Association of Banks, Shonewa, shared insights on this development on PM Express Business Edition.
The key driving force for speculation is volatility. So anything that you can do to take out volatility will then immediately impact speculation. And one way of dealing with the volatility is to improve supply. And now this action will improve supply, which should then reduce the volatility. And once volatility reduces, you will not be paid, and then you want to change some of your cedis into dollars because you to store as value. And the dollar cannot be a store of value in a cedi regime. The only legal tender in this country is the Ghana cedi. Again, the only legal tender in Ghana is the Ghana cedi. So if you are paid and you don't have any need for dollar and you are looking for dollar to buy, you are perpetrating fraud and crime. And I believe the system should fish you out and punish you and use you as an example to others, so that we all stop this pressure of fulfilling prophecies of cedi will depreciate, and then we go and buy dollar to put more pressure on the cedi, and it depreciates, and we say, oh, we said it will depreciate. Then it's like it's a self-fulfilling secular referencing of prophecy. And that is what the central bank, working with the banking system, is trying to avoid. And my wish is that through this process, we can wipe away the black market, and then the transactions will come through mainstream banking. You get proper price discovery, and then we'll get where the rate should be, and it stays there within some allowable constraints. Then we are.
Did you see that going forward based on all these things that are being done? That we'll see the blip.
We are monitoring.
Normal for every
we are
market,
monitoring.
You know?
The decisions that have been taken in the last few weeks have been very positive, and I think they have been forward-looking. And we believe that those decisions will translate into the outcomes that are expected to create and reduce the volatility within the currency, create a stable regime for a while, because that's appreciation is not what the business community is
looking for. And that would
for.
impact on the city's performance going forward as
yes,
well.
Yes, we have strong belief in that.
All right, you're watching The Marketplace. We're taking a short break. When we come back, show business, we build up to the Christmas festivities already. Stay tuned. To staying with us, everyone. Welcome back to the marketplace and to show business. Now, as December fast approaches, can't believe we are talking about December already. Ghana is once again preparing for its biggest cultural and economic season, the annual homecoming of the diaspora. From mega concerts to art festivals, this period injects millions of cedis into the economy. But while the month of December brings visibility and money, it also exposes a worrying pattern. We're joined by culture journalist Kenneth Ochidako to discuss how Ghana can move beyond the seasonal hype and build systems that make the creative sector profitable all year long. Good to have you in studio. Looks like it's been a while.
It's been a while, Darryl.
Great. And like I said, I can't believe we are talking about December
already
too soon. So we are getting closer to the season. Preparations for the big events are already in full swing. But from your perspective, what should we be focusing on before the diaspora arrives?
So usually what we have seen over the past few years has been the situation where during the year, in terms of the creative industry and the creative sector and big events, you do not see so much vibrancy moving around until it's nearing December, where we know that there are going to be more diasporans trooping into the country. That is not a bad thing. That is also a good thing because they get to see what we have to showcase. But then the issue these days is the fact that how exactly are we making use of their arrival beyond just having them come in, celebrate with us, invest in a short-term basis, and then make sure that we also get some of the returns. We are now looking at a situation where we are able to capitalize on that anticipation to build frameworks and ensure that the money that comes in do not just come for the primary reason of just spending, among other things, but also moving beyond that, increasing frameworks that actually exist beyond and transcend the December celebrations as well.
All right. So you use the word showcase. So it appears it's not supposed to be a whole show. What does that mean practically?
So that talks about the translation of that effect into the whole, a year round, because it's being a showcase basically talks about the fact that it is just one thing, but if it's an all year round thing, different sectors of the economy get to benefit from it. There are other sectors that come into play to make sure that the creative industry thrives. There are people from the finance area, there are people from the, when it comes to forestry, there are also people that come from there because when they come, they get to visit some of these forest reserves, see some of the wildlife that we have, and all of those things culminate into, contributing to the economy in terms of boosting the GDP, amongst other things. So if you look at some of these opportunities that I've talked about that we've been missing sometimes, it talks about the fact that the diaspora engagement remains seasonal, and it's also usually consumption-based. So if you look at the fact that local creatives face income instability, this is an opportunity that they can capitalize on, not just during the December festivities, but if it's something that is spread across the year, it is something that everybody in the ecosystem can also have some benefit from.
What should creators be doing themselves?
It is
the lead up.
It's a lot of things actually, but for creatives, I think you must be able to convert your art into a business. Let it be, investor ready, so that when they come in with all of the investment that they have, you are not just part of the people that benefit in the short term just in that December, but you're able to translate that into your long-term development goals and then capitalize fully on the opportunities that come with those things. So you just need to be investor ready, build your business make your portfolio ready for, exploring by some of these investors that come in during this period, so that they don't just come and then tap into your product just once, but able to sustain you over the year.
Yeah, I'm looking at this slide which talks about rethinking the December economy. What sort of mindset shift do we need across board?
So we need to be very engaging. There needs to be cross-sector collaboration. And also we need to be very specific and targeted about what we want as a creative space. And when we are very clear on that, it is easier to build a synergy to ensure that there is some progress that transcends just December, but prior to the festivities and also beyond the festivities as well, Darryl.
Do we have any data on how much we made as a country or have made previously in December when it comes to these diasporan influx and celebrations across board?
Exactly. When it comes to international travels, we know that, earlier this year, we were talking about the report that was released by the Ghana Tourism Authority, which talked about the fact that in 2024, about 4 billion dollars was realized when it comes in the tourism space alone.
Right.
And that was broken down into different sectors. And the December festivities and the Easter festivities formed very large, significant amount of, they contributed a lot to meeting that $4 billion, which we found was very astronomical compared to the other sectors of the economy like oil, cocoa, which were also doing so significantly well. So it is something that is up there when it comes to the numbers, but translating that into long-term value is what remains a problem.
We need to capitalize on that. Thank you so much. Great to see you, Ken Ochidako, creative economy analyst, a cultural journalist. myjournalline.com/business. The day's latest story is over. Enjoy your weekend.